Hello, this is Sergio Morero, and we are here and back in 2021 with our first Rebel One Live of the year. So, to kick it off, we have our amazing guest, Monique Woodard, who is the founding and managing partner of Cake Ventures. Thanks for joining us.
Thanks for having me.
Of course. So, just to give a little background, because Monique will not. Not be boastful of her amazing background. I'm gonna lay it out there. She's awesome. She's a hustler. Been innovating for a long time, but she's a graduate of the University of Miami. She's a serial entrepreneur. Also has been an innovation fellow in the San Francisco Mayor's office, as well as GovTech Product and Innovation Strategy Fellow with the City of San Francisco. She was a partner at 500 Startups and now is and has launched her own fund. So excited to dive in today and talk about everything that's going on for an amazing emerging fund manager in the space. So thank you, Monique. But turning it back to you, if you could share with the audience, what is Cake Ventures?
Yeah, so thank you first of all for having me. This is super exciting. I've seen a few emerging managers that I know do the live stream, so I'm excited to be on with you. So I started a fund called Cake Ventures. It's cake like a layer cake because I believe that there are layers of demographic change that are changing the way that we should invest in technology. And so for me, the three major layers are the 10,000 people turning 65 every single day, this massive aging market that for a long time went underinvested and under innovated. And now I think there's more innovation in the market, but it's still very much an underinvested category. And that's everything from helping people age in place to helping them manage retirement benefits, to create a will, or even thinking about the future of work for people as they age and decide not to retire. So that's the first layer of the cake. The second layer of the cake is companies that can get to billion-dollar outcomes based on the economic activity of women. So women as the primary user group, having the economic power to drive companies to unicorn status. And we've seen it happen in, there are a few big companies that are good examples, like Pinterest is a great example. Glossier is a great example. The Real Real is a great example. And now we're going to start to see it outside of, straight up consumer internet or e-commerce and pushing into categories like fintech and financial services, digital health, or again, even the future of work. And then the third and final layer of the cake is the rise of a new majority, where people of color broadly, but primarily Asian, Latino, and Black become the majority in the United States and are already a global majority if you're building a global company. And so again, these are the three, if you look vertically, those are the three layers of the cake. And if you look horizontally, I think the same opportunities tend to arise: consumer internet and e-commerce, digital health, fintech and financial services, and the future of work.
Absolutely. Thank you for that overview. And especially because one of the questions that was coming was why cake. It's a great. I'm sure everyone asked, so you opened with
Yeah,
it. So
it has nothing to do with food. And it's, I just got stuck on sort of this visual of like a layer cake. And I just couldn't get it out of my head. And so eventually I just called it Cake Ventures.
I love it. I love it. And I specifically, you mentioned, the new majority, people of color. You mentioned, women. You both identify in those categories. So, like the sometimes quoted as the silver tech space, or the
Yeah.
for the older demographic. Why was that a layer for you?
So I invested in my first, silver tech or aging related company in 2016 when I was still at 500 Startups. And I just saw it as this space that was sort of ignored, right? This massive consumer group. Everyone at the time was very focused on millennials. People were starting to focus a little bit on Gen Z. But when you looked at the numbers, people over 55, baby boomers, have all the money. And so if you're thinking about it from a market perspective, which markets are both underserved, have a lot of access to capital, and desperately need innovation. So I thought that those three things made it a really viable market opportunity. If you take all three of those layers together, there's $18 trillion in market opportunity across all three layers. And so putting them all together, I think is really an interesting way to focus on demographic change that is really driving technology today.
Beautiful. And can you and you've talked about the types of founders you're looking at, the types of industries. Can you share a little bit more about what size check you invest in, and then also what stage a founder should reach out to you?
Yeah, so we're focused on seed. And when I say seed, I do mean the seed spectrum, right? As we're calling it. So while most of while most of our investments will be in, true seed stage companies, we do have some allocation for, much earlier companies in pre-seed, and then also that sort of post-seed, pre-A sort of zone. One of the first investments that we're doing is actually in a post-seed, pre-A company in fintech space. So, and then we'll do average check size is $500,000, but we'll do, 250 to, 700 or so. But the average ends up being $500,000.
Great. And
we'll, might as well give you the full portfolio construction.
Absolutely.
And we'll invest in roughly 25 to topping out at 30 companies over a 3-year period. So it's really a fairly concentrated portfolio. So we'll do about 8 or 9 investments a year.
Got it. No, that's great. That's a great layout for those that are aspiring emerging fund managers. I know at Rebel One we talk about this a lot. It's like shifting and you may adapt as you talk to LPs. Can you talk about like how you came about this thesis? You can tell that you've explained your focus many times, the cake and the different industries, but for those that are trying to figure out like where they fit into the world and how to communicate their specific thesis, can you talk about how you got there?
Yeah, I mean, I've talked about this fund a lot now, so it's super dialed in. So the thesis has always been the same. So when I decided to start a fund, at the time it wasn't even called Cake Ventures, it was just called this fund that Monique is starting that she doesn't have a name for yet. I knew that demographic change was a thing that I wanted to focus on. I didn't really have a founder thesis, I didn't really have a geographic thesis or a industry specific or vertical specific thesis, right? But what I did have was, a portfolio that I was sort of looking back on my investments as an angel investor, my investments as a venture partner at 500 startups, my investments as a scout at Lightspeed. And I was sort of like, okay, you have these investments that you've done. What are you trying to say, right? What is your point of view on the world? And, I took a look at my investments. I was an early investor in Blavity, also an investor in Minted Cosmetics, which is a beauty brand for women of color, invested in Silvernest, basically Airbnb for aging. And, as I sort of started to parse through the investments that I got excited about and really drilled into my point of view on the world, I realized that it was really demographic change that I was investing in, right? And that, my investment perspective was more human and user-centered and focused on the way that the internet user base is inherently shifting and changing forever. And so once I realized that, I think articulating it became really easy. I mean, certainly it took some practice, right? But starting to talk about it became a lot easier because it had a focus. And it really resonated with people. I think there weren't very many people talking about demographic change in that way. And I think that's what really drew a lot of LPs and a lot of people to what I was building. And so it just became kind of second nature. I would also say that I've always been a writer. And so writing a lot about my point of view on the world, um, I wrote a bunch of Medium articles about sort of the rise of a new majority. I wrote a white paper called Gray New World, which is about, you know, the aging market. And being able to like articulate that in writing was really helpful in getting me to a place where I could talk about it over and over again.
That's great. And can you, I mean, it's, your background is definitely unique. For those that don't know, you studied political science and government when you were in the University of Miami, and then looking at your background, you also have some I say tentacles in the public sphere. Can you talk about what led you to go from there to end up being a venture partner at 500 Startups?
Yeah, I mean, I was a poli-sci major in college, and my minor was in music business and entertainment industries, and I thought I would go to law school and become an entertainment lawyer and become an agent, right? And I really look at venture capital as a career, as like we are the agent of the technology industry, right? And entrepreneurs are the artists and, you know, the actors that we represent, and it's my job to like get them the things that they want and the things that they need in order to be really successful. And so I don't look at it as like that far afield. I also had a huge interest, still have a huge interest in government technology and innovation that touches some areas of regulation. And so I think, as you sort of develop over a career of many years, you sort of take those experiences and sort of put them into the thing that you're doing now. And so I think that having that kind of background and having a really varied background is really conducive to being in venture capital and to kind of dipping your toe into many different areas, many different industries, getting up to speed very quickly. I mean, I've also been a founder. So, I started my first company when I was just out of University of Miami. And back then it was like, it wasn't even called starting a startup. Like the internet was so early that it was like figuring out how to make things and make them make money on the internet. And, I was really good at that. I was really good at building products. And so rolling all of that into a career kind of, lends itself to being in venture capital and being able to like help many different people do many different things all at the same time.
Was this Woo Media?
Yes. And I also started a mobile shopping app called Speak Chic.
And so that was your first foray. When you left, you just wanted to dive in, and focus and on media. Can you talk about what shifted the needle from starting companies to investing?
Yeah, I think I moved to San Francisco in 2008. I was working in product for a company based here in the Bay Area. And then I left that company and I started Speak Chic. And I also started meeting a lot of founders at the time, and I was giving them advice and, helping introducing them to investors that I knew. And I started a community of founders, and I just got a lot more deeply involved in helping other founders and trying to, help them be successful. And at some point, I sort of looked around and I was like, you're doing a lot of the work of a VC without the checkbook behind you to write checks into these great companies. And I was like, you should probably fix that and go on the other side of the table. And so I did. It took some time, but I eventually like worked my way over to the other side of the table and ended up at 500 Startups.
And what, I mean, you're in the Miami area. I feel now everyone, because of COVID, is fleeing to Miami.
Yeah.
And can you talk about what inspired you to shift from Miami to San Francisco at the time?
Yeah, I mean, Miami's a great city, but at the time, we're talking like early and mid 2000s, there was certainly no venture capital was in the city at the time. And there wasn't really a tech startup ecosystem, right? That's something that's been built over time since, since I left. And I really thought, one, I didn't think of San Francisco as this place where I needed to be, or even that I should be in San Francisco. Um, I had never been to San Francisco before, and it just wasn't a place that was even on my radar. But when I got here and, then this company made me an offer, I didn't really feel like I had a reason to say no. So I said yes. And then I moved across the country. And I think like being able to like take those kinds of risks is really important. And it came at the right time. And I think if I had been in Miami today, it would have been a totally different scenario, because Miami definitely has a culture that in a startup culture and a startup ecosystem that's being built, and angel investors and now venture capital investors are flocking to Miami. So I think it would have been different if I had made that decision today. But in 2008, the right decision was to come to San Francisco.
And now with everyone moving back, would you go back or I'll turn that over to you to say, it's like, would you go back, and do you think this is a short-term fad, or are people going to move over there to stay?
Well, I grew up in Florida, so I go back all the time. I was in Miami for Art Basel the last time we were able to travel. So I love Miami. I love going there. Still have friends there. So 100% would go back, both to visit and maybe not permanently, but I could see myself going semi-permanently and sort of splitting my time between San Francisco and Miami for sure. Um, I think there's like a lot to be built in Miami and a lot to be done that's really exciting. So 100% would do it. Um, and do I think it's a fad? I mean, I think people have to have the will to want to build something sustainable, right? And want to build something, truly build an ecosystem there. And I think that people are being sincere in their interest in Miami, and that they're going to stay there and build something great. I mean, I would love the option to be able to go back and, drop in and be able to see other VCs and be able to meet other founders, and just have that sort of network and support that I know I didn't have when I was living there.
Yeah, and I hope it continues to change as well with was it Black Men Talk Tech, have run more conference in their emergence, and there's quite a few startup founders that are dedicated to the region
Yeah.
and staying put, so that does feel like a positive force.
Yeah.
If you're can you talk about the shift from, that it's different being a venture partner at 500 startups and focusing on deal flow, and saying, hey, I'm going to start my own venture fund? When did that come about?
Yeah, so I left 500 in 2018, and I was sort of thinking about what I was going to do next. And lots of people were like, well, are you going to join another big firm? And there were certainly people like reaching out and, wanting to talk about joining their firms. And, I didn't, I was sort of like noodling on the thesis and on the point of view that I had for Cake Ventures. I didn't really feel like it neatly fit itself into an existing fund or firm, right? And so I am an entrepreneur by nature. So when I don't see something that exists in the world, I feel like I should just start it. Right. But that's a very different prospect than deciding to go and become a partner at some large firm. Right. And so you have to like raise capital from LPs. Two, there's like the whole operational iceberg in the background that you have to deal with. And so it's a very different muscle that you have to learn how to exercise if you plan on being a fund manager. And I think, to be honest, the operational pieces of it are the least fun aspects of being a venture capital investor, but it's a necessary part of it, right? It's like, being able to set up your back office and being able to choose a bank and being able to get a line of credit and being able to, pick the right lawyer and deal with your lawyers and, all of these sorts of things. And then, going out and pitching LPs. And those things are just a necessary part of being able to do what you really want to do, which is run a fund and invest in the best founders.
And for the just as we have some emerging fund managers watching and listening in, how long did that take from, I think I'm going to start a fund to, let's say, first close, like realistically, to give, just to I know you're not you're always one to drop the truth. So I enjoy that.
Yeah. So I left 500 in 2018. And then I was sort of like, first of all, I want to go to sleep. I want to take a nap. I think I slept for like 3 days. I was just like, 500 was a lot of work. And, after that, people were asking me what was next. And I was like, I don't know what's next. And so then I started scout investing, and I was doing that for a while and sort of, looking at my investments and sort of trying to figure out if a fund was what was needed, right? Whether it was even necessary for the market. And I would say that I started soft talking to people in like mid to late 2018, and then went out and started like traveling to meet LPs in 2019 and did a first close in this month, January 2021.
Congratulations through a pandemic.
In a pandemic.
That's great. That's great. I mean, what was your first investment? And I would say, I'm going to back up. What was your first investment? Not a part of Cake Ventures, but personally, your first personal investment.
I was an investor in Blavity. I am an investor in Blavity. So I think Blavity was my first check in at 500 startups. And then I also invested in Court Buddy personally and Minted Cosmetics personally. So I was doing a lot of investing all at the same time, both personal and, fund.
Great. I mean, I say, what is it? Also an investor in Core Buddy, founded through 500 startups. So great network. Also Miami roots.
Yes, that's Miami founders.
If you and going back to like the fundraising and some of the insight there as you're beginning to make your investments, I know I heard on Black VC, you gave a real synopsis of just how difficult it was. Can you share a little bit more for the aspiring fund managers out there? Like what were some of the biggest challenges as you were making your way to close?
Yeah, I mean, I would say that, one, I'm definitely underrepresented in the venture capital space, right? There are very few Black women fund managers. And so I think when I went into, these institutional VCs offices, they just sort of didn't have a framework of like what to do with me or like where to put me. And, sometimes there would be like, oh, well, are you raising a diversity fund? I'd be like, no, this is my thesis. And they're like, but is it a diversity fund? And I'm like, I think we should all be investing in diverse founders, but like, that's not what this focus is. And so like, I think that they were trying to like put me into slot you into a place.
Mm-hmm.
And they can't place you, that often is like a no. Right. And so I think eventually the trick to being able to raise a fund, frankly, is to be able to stay in the seat long enough to do it.
And explain that a little bit more. What do you mean by that?
And so, when you go out and raise a fund, you don't have a salary. you are living off of your savings, you're flying all over the place to like meet with LPs, at least pre-COVID you were. Um, you're flying all over the place to meet LPs. You are sometimes paying for legal out of your own pocket. It's a very expensive undertaking. And it takes LPs often, especially institutional LPs, a long time to get to know you. And it can take a year, take 2 years before they're ready to make a commitment. The longer you can stay in the seat, the longer it takes, like the longer you can go before running out of like money and runway personally, the better. Because that is what kills. There are two things that kill fundraisers for funds: running out of money personally and running out of LP prospects. You run out of either one of those, you're dead in the water. And so the longer you can stay in the game, the more likely you are to come out on the other side with an actual fund. And that's
Love,
just the hard truth of it. It's not pretty. Like
yep, absolutely.
that is how the sausage gets made.
Yep, absolutely. And you talk about, it feels like having enough money to stay in the game. There's a lot of hacking there, right? Like whether it's part-time roles or savings or, like family or, like all these different things for this new world of LP prospects, right? Like what, and, not giving away your, like your Rolodex, but like how did you keep that going for you?
You mean, how did I just stay like in it and being able to continue fundraising?
Yeah, like I mean, I guess for in short, for other emerging fund managers, like they want to know how to find LPs. What are some places you recommend for them to get started?
I mean, I would say that a lot of LPs knew me and knew of me because I had had a career at 500 startups. I had been a founder. I had like, I was well known, so that helped. That said, that doesn't necessarily, it helps you get over the initial hump. It does not necessarily help the acceleration of time that you need in order for LPs to feel comfortable investing in your fund, right? And so a lot of times it's, they're waiting for companies that you've invested in to mature and for you to realize markups on those early investments. They're waiting to see if you're going to actually be able to raise capital. They're waiting to see, they're waiting to see. Like,
Yep.
and so getting to know LPs, I mean, I would have friends introduce me to LPs. I would have, once I did get a few LPs under my belt, those LPs introduced me to other LPs, and it just kept rolling on from there.
And no, I appreciate that insight. As we look at venture, like taking a step back, looking at venture, really tough for any emerging emerging fund manager to start, let alone a person of color. There's all these changing forces in the space, the rise of crowdfunding. What do you feel are some of the most prominent trends in venture? Like how do you feel venture is changing and needs to change going forward?
I mean, I think one thing that we're seeing is a bigger pool of potential fund managers. I think that, AngelList rolling funds have really opened up, opportunities for people who might not have otherwise been able to raise a traditional fund or might not have raised a traditional fund. My fund happens to be a traditional fund. It's not a rolling fund. But, I think that that innovation in the fund types is really important to being able to get more types of people to be able to actually deploy capital. And the more diverse the investor base is, the more diverse the founder base can be. And I think that's really important. So I think that's kind of the biggest innovation, is that now you're seeing a lot more operator funds. right? So people who, come from an operator background, not necessarily a venture capital background, starting funds to invest in other founders and in other operators. And so I think that type of sort of democratization of capital is exciting.
Yeah, absolutely. Exciting. I don't think it's going to stop. And rolling funds, I mean, that's one thing I see. It's like you have rolling funds that are enabling people to invest on a subscription over time, and making it a little bit easier to get started. And as well as crowdfunding, it seems to be a lot of, with that as well, with a lot of this, new funding being available for early stage founders. One thing I sometimes see is that sometimes early stage valuations are getting inflated like very quickly.
Mhm.
What do you think it feels like with a lot of capital, there may be some dangers as well. How do we remain prudent, especially in the pre-seed and seed stage?
Yeah, I'm actually not that worried about it. I think the sort of, I don't want to use the word inflated valuations, because it's
Mm-hmm.
not as though it's not as though they're inflated, but the higher valuations than expected that we've seen in 2020, and even now in 2021, I think a lot of that was not necessarily because there was more pre-seed capital in the market, or it wasn't a function of there being more rolling funds in the market. I would say that's even a function of like there being more capital at large multi-stage firms rather than at smaller, more nascent firms. And I also think it was a function of COVID, and there were a lot of business models that now made a whole lot of sense in sort of a very suddenly different world that we were living in. And so I think that it was just a perfect storm of, look, these companies are getting built and they are taking advantage of the changing market opportunities around COVID, or brought about by COVID. And they are, because these are what will be the bigger companies of the next 10 years or so, they're able to command a higher valuation.
And if you're to look at like these trends, making it more, like you said, democratizing, making it more accessible for um, founders of color, what are other things that you think we need to do, or that need to change in the ecosystem for more women and founders of underrepresented founders to get the capital they need to succeed?
Yeah, I think that if you change, look, we're starting to see more diversity at the fund manager level, but it's mostly concentrated in the, you know, I would say sub $50 million fund level. And I would say that if you start to see um, more women, more Black fund managers at above 50, so 100 and up, I think that getting companies across the line, across the Series A, across the Series B, and beyond, is going to be the next big hurdle. And I think we also have to see more investors of color at large firms that have no Black VCs, and have very few women VCs, right? And so you're looking at the Sequoias and the Accels, and the large funds of the world who have not done such a great job on racial diversity, and only recently, as in like right around Me Too, started to do a decent job around gender diversity. And so I think that even though we're seeing successful fund managers of color, we also have to be really thoughtful about where those large existing legacy firms are going.
Great. So before we close, can you share with the audience what's next for Cake Ventures?
More fundraising.
Awesome. So for
Never stop.
It never stops. It never stops. So for those of you that are that want to get in touch with Cake Ventures, the link is in the podcast notes. Monique, how best should they reach out to you?
Monique at cake.vc. Monique at cake.vc.
Great. So thank you, Monique, for joining us tonight, and for everyone watching on the live stream. Thank you for joining us for our first series of the new year, and stay tuned as we have more VCs and CEOs join us on Rebel One Live. So thanks again.